41,000 crore rupees dividend. Well, that is a mind-boggling figure, and this type of dividend Vedanta is given in financial year 23. Now you must be thinking as a retail investor, wow, this company is giving you so much of dividend. Why should not I invest in this company? Well, this is where I am going to show you the mirror today, and I'm going to discuss whether you should invest in this company or not. That is Vedanta, and we are going to talk in detail how the company has performed and the way their dividend strategy and what type of shareholding pattern they have, and whether it is a good sign for the company and for the shareholder. All these things we are going to talk in detail. So welcome everyone guys, my name is Tapan Doshi. Welcome to my YouTube channel, and let us start seeing about Vedanta company in detail and whether as a retail investor you should invest in this company or not. Well, if you talk about Vedanta, just recently the quarterly result, Q2 financial year 24, well, they've given a loss. Well, the loss is related to that they've changed the tax rate, and that is why they are having a loss. But that is just a taxation policy they have changed. That's why they are having a loss, but that is not impacting the PNL. But the main part is the structure, the way they are conducting the business, and what are the way the management is handling the business, the way their shareholding they are actually increased in last few years, and the way the dividend policy they have declared, that is actually raising very serious concern about the Vedanta company. Do watch this complete video, because this video is going to open your eyes, and this is going to show how the management can put their self-interest first, and then they will think about the retail investor. So let us start talking about Vedanta. So talking about Vedanta guys, you can see here, as I told you, almost 41,000 crore rupees dividend they have declared in last financial year 23. Before that it was 19,000 crore rupees. Okay, that is coming from the cash flow statement only, dividend paid, and earlier it was 9,000 crore rupees dividend. So over the years, yes, the Vedanta used to give lot of dividend, but actually specifically in last 2 years they've given a lot of dividend. Now this is what you have to think, why they are giving. As a retail investor you must be thinking, good now Tapan, they are giving more dividend, so for me it is much more beneficial. But guys, understand, if you are a shareholder of Vedanta, you have to understand the inside story, and that is what I want to tell you here. So if we go in detail about Vedanta current market cap is 87,000 crore rupees, stock is around 17, ROC is 21%, everything is okay. Book value 85, and current value is current price is around 235. So you can see here but the main overall ROE is also decent enough, but the main problem is the dividend yield 43%. Now you may be thinking, what is wrong in it? The main problem here comes into picture is that they have a lot of debt. If you see the debt here, is from 37,000 crore from March 2020 to 36, 43 and 53,000. Okay, so overall if you see the borrowing is increasing only. Now this is surprising, no? Like, you are declaring so much of dividend, which is one of the highest in recent year, then why your debt is not going down? Actually you should use that dividend for not paying the dividend, but that surplus reserves amount in paying the debt. No, correct? You can see the reserves from you can say 61,000 crore rupees has gone up to 65. Then in last 2 years, as they have declared such a high dividend, like 19,000 crore rupees in earlier year 2022, in 2023 41,000 crore, you see that 65,000 has gone down to 31,000 crore rupees. So reserves it is decreasing, but they are not paying the debt. They are giving the dividend. Now you may say, okay, they are giving dividend, is it going to the retail investor? No, that is also where, no, there is a puzzle, and that is what I want to show you. If you see the shareholding pattern, you can see here till March 18 it was around 50%. Okay, even March 20, and then the COVID crash happened, remember? And during that COVID crash, the stock price has gone around 88 rupees, 87 rupees of Vedanta. Now that time Vedanta thought, okay, let us buy back our shares, at least it is available at a very cheap value, and they have given a buyback offer. But by that time the stock price has gone around 131 odd, but they given a buyback at 87 rupees. I am talking about almost 1.5-2 years back. But at that time LIC PSC and big institution told completely no, that we don't want to sell at a 87 rupees. If you want, we'll sell it at a 320 rupees. Now this is where the Vedanta buyback offer gone wrong, because what they started thinking, okay, let me buy these shares for me myself, and no, then in future everything, all the dividend and everything, the company shareholding will be under our hand. So 50% they want to increase to 70 to 80%, but that thing does not happen because most of the institution told no. So now they started thinking, okay, let me reverse the strategy, and here they have started thinking. You can see here the promoter holding from March 20, it has gone up to March 21 to 55. Then by March 2022 it is 69%, that is around 70%, and March 23 68%. Now this is where, as I told you already, in March 2022 and March 2023 they've declared the highest dividend. So suppose they are roughly around 60 to 70%, around 70% shareholding. So whatever dividend declared on that 41,000 crores plus that 19,000, almost 60,000 crore rupees, 70% is going to the promoter only. Okay, and 30% will go to the retail investor. Now, but they are working as per the rules, okay, rules of the company. So it's not that violation, but I'm just trying to say is that how the company is putting the self-interest first. So here they are taking the highest dividend at their home, okay, and now in September 2023 there is a decrease of almost 5%. So now they already declared the dividend. So let me show you here. So if you talk about the shareholding pattern, you can June it is 68%. Now it has gone to almost 63.7%. And out of this, if you see where are the main trades? Main trades are here. And you can see here that Twin Star Shareholding, okay, the promoter is selling most of their stake in the company, and that is what the dividend is already declared now, and that is now they are reducing the stake. And you can see here the stock price also. If you see the stock price, to take the last 5 years chart, as I told you, when it was around June and I don't know, this was around 80 rupees or 81, that is where they wanted to bring the buyback offer, but did not happen. And then they started increasing the promoter holding, okay, and at this level somehow in here, this is the place where they started giving more dividend, and the more and more dividend actually going to the promoter only. And now they started selling the shares. Now in between, if you know that there was an news that they are going to have a collaboration with Foxconn, no, for semiconductor production and all that. Now Foxconn also actually cancelled that deal with Vedanta. The one of the main reason is nothing but, if you go to the paper, is nothing but no, the deteriorating balance sheet of Vedanta, because they also came to know, boss, this is the reserves, and most of the reserves are going as a dividend, and they are not reducing the debt, and that is a red sign. And I don't know whether the Foxconn also, they initially they brought this collaboration, was it to increase the prices, and because of that the price has gone to almost 420 to 430, and then they declared this news, and now the stock price is going. And in future, I don't know, I'm just making an assumption, but the way the management is going around, this stock price may go down to again to 80, maybe 100 in future, and again they may bring a buyback. But what I'm trying to convey here is that they are using this all the structure in a legal way to get benefit for themselves, and this is not a good sign. Now you may be saying why they are doing. Well, that Vedanta has to answer, and Anil Agrawal has to answer. Anil Agrawal, you know, it's a big public figure, but Anil Agrawal is staying in London. He is not an Indian citizen, and the way this thing is happening, it's not giving a good sign. The way they are actually corporate governance, and more than corporate governance, the way they are handling these stock prices, the way they are declaring the dividend, actually they had a very good option to actually repay the debt and make the complete company debt free. If you talk about that, no, you know that dividend was around 60,000 crore rupees, and you see what is the borrowings is almost 75,000 crore rupees. Okay, so they can easily repay the debts, and no, they can make it much more lucrative for the investor, and in future, no, more and more profit they can got it. And also the Foxconn, whatever the collaboration was there, if they have not done this, no, वो cancel भी नहीं होता, and currently the company would be in a good position. See, you know, the Vedanta is one of the leader in metal industry, zinc, aluminum, and no, so many copper and all that. No, they have a very good hold. and somehow they are missing this thing. And as a retail investor, where we are getting stuck here, we think that Vedanta is declaring so much of dividend, so it is for my benefit. Yes, they have declared the dividend, so whoever has bought at 80 or 100 rupees, of course they have been benefited out of that. Of course dividend was there, plus the share price increase, everything. But from here, whether this company holds goods ground or not for the future, now this is where the biggest question comes into picture, where honestly speaking, I do not feel the management is in the right track, and now they are working on the interests of retail investor, minority investor. They are mostly focused on putting their money back to their pocket, and again they want to actually decrease the you can say the parent holding debt. And that's why I don't normally like this type of company. Again, all this company, whoever they're in the metal industry, they're cyclical in nature. If you see the stock price also, so you can see the chart from last 2006, and here you can see the stock price has gone to almost above 460 70. That was in 2010, around 2010 11. But however, again it has gone down, again it has gone up, gone down, gone up, and it's just completely cyclical in nature. Overall, this stock will not be a like compounding return over there, and that is what the management knows, and that's why they want to cash out as a dividend all the profitability whenever there is a good cycle. And this is what goes against the company, and that's why I will not recommend this type of company, and you should stay away from this type of company. No matter sometimes the economic cycle is up and all these companies may make a good profit, but that is where you have to understand, you get in, then you have to get out very fast. It is not a stock where you can stay for next 5 years, 10 years, and you can make a big money. If you want, better stocks are available in IT, FMCG, banking, which are giving you a compounding return. But stay away from this type of company where the management is not correct. Again, no need of going to the financials and all that. Yes, these financials are there, but at the end of the day, it is not showing you the right picture. The cycle, when it is uptick, every figure in this P&L and balance sheet, you feel that yes, these are very good. But when there is a downtrend, this is where the problem. Again, it is not that all the metal companies have this type of like you see Tata Steel and so many other metal companies, there's JSW and all that. But this type of policy no one is adopting, but this company is adopting this type of policy, and this is where you should be very, very careful, guys. It is your hard-earned money, so do not put money in this type of stocks. And again, the dividend policy is always there, but understand, when a company is declining so much of dividend, that means they don't have a venue to invest that amount again, and where they can get much more ROE than what they are having now currently. Correct? अगर वो आपको रिटर्न ज्यादा नहीं दे रहा है, then they will normally declare the dividend. So they don't have a reinvestment strategy. Normally, if the company do not have a reinvestment strategy, they always take the dividend more. But here also, yes, there may be not a reinvestment strategy, but also here I think the management is much more having their own self-interest, and that is where you have to be very, very careful. So whenever you invest in the metal companies or any other company where you can see this type of pattern, be very careful. The high dividend figure is just you can say to divert you from the core topic. So do write in the chat box whether you are holding Vedanta or not, or whether you are holding any type of this type of company where you are being misrepresented and somehow the management is taking benefit of your investment. So guys, do write it down, and I always do check the comments, and do like this video and subscribe to our channel. More and more informative video of stock market I always release. So I'll see you next time. See you.